Whether you're looking to grow your portfolio, ride the AI wave, or just stay ahead of the curve, these are the top 5 stocks to buy in 2025 that you don't want to miss. These picks are backed by solid trends, fundamentals, and future growth potential. Hi, my name's Gautam. I'm a former finance executive turned options trader, and I'm here to help you escape the 9 to 5 grind like I did with the power of options trading. If you'd like a copy of my free ebook that covers my top option strategies to help you retire early, hit that like button, subscribe to my channel, and comment down below, and I'll personally respond to your comment with the ebook link. Also, don't forget to sign up for my free options newsletter, link in description below. So my first pick is none other than Berkshire Hathaway, and I'll tell you why. I have an article pulled up on the Motley Fool, and it talks about if you could only buy and hold one stock, this would be it, and that's Berkshire Hathaway. As you all know, Berkshire Hathaway is an investment conglomerate run by arguably the greatest investor of all time, Warren Buffett. But not only that, the company is sitting on a huge pile of cash that sets it perfectly for any economic conditions or any fallout in the market. Berkshire shares have outpaced the S&P 500 by 90% over the last 5 years, and the gap is even wider the further down you go. It gives you exposure like an ETF to Apple, American Express, Coca-Cola, just to name a few. And again, think companies like Geico, Dairy Queen, car dealerships, and the most notable business is none other than Berkshire Hathaway's insurance business, which Berkshire has famously used the float from its insurance business to invest in other companies and buy stocks. Berkshire Hathaway finished 2024 with 334 billion in cash and short-term investments. I have Berkshire Hathaway's chart pulled up on Yahoo Finance, and we're looking at the 5 year chart, and it's probably one of the most beautiful charts that I've seen. It continuously shows an upward trend from 2021 all the way to 2025. So even with the markets pulling back 20% this year, we saw absolutely no pullback in the Berkshire Hathaway stock. So again, that tells you how strong it is. And if you had one stock that you could own, then this should be the one. My next pick is none other than Netflix. In my opinion, it's probably the best defense play right now, as it is not impacted by tariffs and a recessionary economy if it gets to that point. Because guess what? People may spend less money and not go to the movie theaters, but most likely will not care paying 15 to 20 bucks a month for a Netflix subscription where the whole family can get entertainment. So Netflix just released its earnings recently, and let's check them out. Its Q1 earnings per share of $6.61 surpassed analysts' expectations by a significant margin, driven by strong subscription and advertising revenue growth. Revenue grew 12.5% year over year, exceeding estimates. For future outlook, Netflix predicts continued revenue and profit growth with no change to its 2025 guidance for a revenue of $43 to $44.5 billion and an operating margin of 29%. Overall market and investor sentiment is generally optimistic about Netflix's future, citing the company's resilience in a challenging economic environment and its strong performance in the streaming market. I have the 6-month chart pulled up for Netflix right here. It reported earnings on April 17th, and as you all can see, it jumped all the way from $1,000 and made a new high of $1127.81. Looking at currently, it's at the top of the Bollinger Band, which is this yellow line right here. I would say that right now is probably not a good time to get in the Netflix stock as it's at the top of its Bollinger Band. So I would look for a possible pullback and some support areas, which we have a support area at 1,058, and then we have another support at the $1,000 level. So I would potentially sell cash secured puts at these levels and try to get back in the stock if you're interested. Again, for a small account or even a medium size account, it is still a quite expensive stock as we speak. So hopefully they'll do a stock split down the road. But at the moment, it is a quite expensive stock. So my next pick is none other than Palantir, and nobody should be surprised that this stock made it to the list. I have this article pulled up on CNBC, which talks about why Palantir is soaring while its tech peers are sinking. And here's why. Palantir is up 45% this year, bucking the broader downward trend in the technology sector. The company's government business and focus on efficiency are responsible for the stock's outperformance. Palantir has set itself apart in the software world for its AI-enabled tools gaining recognition for its defense and software contracts with key US government agencies. They go on to say that against a volatile market backdrop, the software maker's stock has gained 45% and is actually the best performer among companies valued at $5 billion or more. Last but not least, Palantir's business model is highly aligned with the priorities of the Trump administration in terms of increasing agility and being very quick to the market. So while Palantir continues to have a crazy PE ratio of 611, it still continues to be a really strong stock. In fact, looking at Palantir's 6-month chart, we notice that even though the Palantir stock had a drawdown, just like the rest of the market, it never broke its 200-day moving average, which tells you how strong it is. In fact, as the Qs and SPYs started to recover in the past few weeks, Palantir has jumped back and it's actually pretty close to its all-time highs of 125s, closing the day today at 115. Going back to Yahoo Finance, it has been beating its earnings per share quarter over quarter, and the revenue and earnings have been increasing steadily. My next pick, and actually my favorite stock for 2025, is Robinhood. Robinhood is another stock that has stayed extremely resilient while the rest of the market has taken a beating since the beginning of the year. Additionally, the company had a record-breaking Q4 and a record-setting year in 2024 as it reached new highs for revenue, net income, and adjusted EBITDA and earnings per share. For Q4 2024, Robinhood's total net revenues increased 115% year over year, and transaction-based revenues more than doubled to $672 million. This impressive growth was driven by cryptocurrencies revenue of $358 million, which marks an increase of more than 700%. The company is also focused on expanding its product portfolio and growing internationally. Since the start of Q4, it has added 7 crypto assets in the United States, also introduced Ethereum staking in the EU. Robinhood is also planning to enter in the banking sector later this year. In fact, I'm linking a video right here that I made a few weeks back talking about why Robinhood is my top pick for 2025. Looking at Robinhood's fundamentals, it has a decent PE ratio of 3165. It's actually scheduled to report earnings tomorrow, April 30th, 2025. So let's see how that goes. It's been beating earnings per share pretty consistently over the last 3 quarters. Revenue has been increasing steadily. In fact, it went from a revenue of $618 million in Q1 2024 to almost $1 billion in revenue with a 90% margin, which is absolutely insane. It's currently trading at $49.37, and with the average analyst price target at $58, it still has some room to go. So looking at Robinhood's 6-month chart here on Thinkorswim, it's currently trading close to 50 right now and is at the top of its Bollinger Band. So I would probably sell cash secured puts close to the 40 or even lower at the $35 strike price. So you have quite a bit of room for the stock to go back up and you can profit that way. Last but not least, we have SoFi Technologies, which is a fast-growing fintech offering a suite of digital financial services from personal loans to banking to mortgage loans to student loans, student loan refinancing, insurance, credit cards, investments, and even travel. SoFi released its Q1 earnings today and hit the ball out of the park. Revenue hit a record $771 million, up 33% from last year. Adjusted EBITDA surged 46% to $210 million. And most importantly, SoFi stayed profitable, booking $71 million in net income or 6 cents per share. It was a sign that SoFi's sprawling fintech ecosystem from loans to investing to digital banking infrastructure is finally working together. The member count jumped to 10.9 million, product adoption hit new highs, and fee-based revenue soared 67%. Looking at the fundamentals of Yahoo Finance, it enjoys a healthy profit margin of 18%, and it's been beating earnings per share quarter over quarter, as you can see, and revenues have increased steadily quarter over quarter, and so have the earnings. It's currently trading towards the higher end of the analyst price target. So I would look at the 6-month chart right here and again, try to sell cash secured puts towards the middle of the Bollinger Band and try to get an entry in. And that's how I would play SoFi. I hope you enjoyed this video. If you found it useful, please like this video, share it with your friends, and let me know your thoughts or questions in the section below. I'll catch you in the next one.